Income Tax 2020, Practice Problem 1, Presentation 19, Itemized Deduction, Medical and Dental Expenses. We're going to be looking at it from the side of a tax formula with the use of an Excel worksheet. Come in, relax with Income Tax 2020. Here we are in our Lacerte tax software. You don't need the Lacerte tax software to follow along, but I do think they have a 30-day free trial. So if you can get access to a promo or demo version of it or any other tax software, it could be a good tool to practice with. We're going to be continuing on with our comprehensive practice problem number 1. In the prior sections, we entered the total income information. Then we concentrated on the second section in the adjustments to income. Now we're looking into concentrating on the standard or itemized deduction, this time the itemized deductions. So we're currently taking the standard deduction, $24,800. In the prior presentation, we went over to our Schedule A and started thinking through the Schedule A from top to bottom, although in practice, you probably would first be looking for whether they own a house to look at the interest, income, mortgage interest, because that's usually the large thing, as well as the property taxes that often pushes people over to the point to where they would be itemizing. So we're not yet itemizing at this point, but we're going to take it from top to bottom so we can analyze this from top to bottom and then see the item that will probably push us over, that being the interest on the home. So we're starting here at the medical and dental, and this is going to be information that the client's going to have to provide for us. We're going to now put this into the Excel worksheet as well. Now remember, when you go to the Excel worksheet, you want to put it into the Excel worksheet as much as possible straight from the source document so that you can double check the data input, make sure you didn't make any errors with the data input from one side to the other. Also, the Excel worksheet will help us to just kind of analyze this in terms of a formula basis. So if I go back on over, and that's going to be the easiest way to kind of visualize the effect on these things. So this is going to be our starting point. So now we're imagining that the client gave us documentation saying, hey, look, I had medical expenses that add up to this $10,000. That would either be in the organizer that we give them, that they would then fill out and put the medical expenses, or they would have to put a note, let us know what the medical expenses are. So if we're going to put this in here, we're going to say, okay, we're looking into the itemized deductions now, which we're not taking any of them at this point, and they need to be greater than the standard deduction. So this worksheet, we can put these two things side by side to see that really clearly on a worksheet. So I'm going to then go over to my adjustments to income, not the adjustments, the Schedule A itemized deductions. We'll start up top, and I'm just going to put in $10,000 in the medical expenses. Now I have this nice little AGI limitation. This is one area where I'm not going to depend on the software totally. I'm going to do a nice little pretty simple calculation within the software to show our floor that will be involved here. So we got the floor that's going to be involved. So what's happening here, the 65,130 is coming from the tax formula, the adjusted gross income. So that's coming from, you can see here the tax formula over here, that's coming from the 65,130 right there, and then we're taking 7.5% of it, or 0.075. You can make that a percent if you'd rather see it in a percent format. 7.5%. We'll keep it there. Then you can multiply those out, and so here we have our multiplication of that. So now we got the 4,887. And notice I have the formula is a little bit more complex, but it's basically just the 65,130 times the 7.5%. But if you just want to see the if formula, we're saying if C4, which is the 65,130, is greater than 0, so anything greater than 0 on the adjusted gross income, then we want to take this number C4, the 65,130, times C5, which is the 7.5%. If not, then 0 here we're going to have. And then we're going to say that the medical expenses then are basically going to be the 10,000 minus the 4,885. It's a little bit more complex of a formula here. So if you want to see the formula, it says if we're taking C3, so C3 is going to be the 10,000. If the 10,000 is greater than C6, which is going to be the 4,885, then we want to take the C3 minus C6. So if this is greater, if not, then we want to have a 0 here. And so that would mean, so for example, if this was less than, if I said that this was like 3,000, then I don't want this to be a negative number. That's all it's doing. It's saying, hey, only do the subtraction problem if this is greater than this. Otherwise, put a 0 there, because I don't want it to be negative. Otherwise, it's going to mess up my bottom line. So that's basically it. So now we got that 5,115, and that is not greater than The standard deduction, so if I pull that on over to the first page, then it's not greater than the standard deduction, and therefore we wouldn't be taking it yet at this point in time. Now, when you look at the Schedule A, it can be a little bit confusing because some of these will be automatically calculated possibly by the software. So note that if I go to the Schedule A on the software, there's that 5,093, but it's automatically calculating the sales tax because the sales tax is higher than the state taxes that we put in. So in some instances, you might be kind of dependent on the software to help you with that calculation. So in other words, if I go down to the bottom line, I'm not lining up. I'm still not taking the standard deduction. I mean, the itemized deduction, we're taking the standard because it's higher, but I don't come up to the same number down here as we did on the other side. So let's take a look at that in more detail. If I go back on over, now we could say in this worksheet, you could kind of depend on the payments that were made. There was 820 in payments made over here, which I think I actually put in the data input wrong over here. This should be 370 on the weight on the so this should be 370 on the state taxes. So I'm just going to include that. It's not going to adjust our federal income taxes, but it will include that 820, which would be pulling over to the state taxes possibly. However, the automatic calculation for the sales tax is currently higher. So it's picking up that 865. So if you're working on the Excel worksheet and you want to tie this out exactly, even though it's below the threshold at this point, if it's below the threshold, you may not care. You might say, I'm not even close, so I'm not going to be itemizing. But if we want to tie it out, we're going to say, all right, let's go back to the Schedule A. Your first inclination on the state taxes might be to take the state taxes from this worksheet over here, which is the state taxes that were paid. But if you're in a state that doesn't have the state income tax and you're taking the sales tax, you may be dependent on the software to basically estimate that, which would be the 869. So if that were the case, I'd have to say this was 869 and just hard code it in there. Probably be reliant on the tax return in order to get that number. We also had the charitable contributions. You'll remember that we put them on the first page of the 1040 because we're figuring that we were taking the standard deduction. So we included them in the above the line items here, the adjustments to income, and those were included on this worksheet and they were capped at 300. But they actually had 500 that was contributed, and if they were to itemize, then you would get the entire 500. So if we go to the gives to charity, I'm going to add that here as well. So if we were itemizing, we could put them there, and that would add up to that 6484. So that would then tie out to this 6462. And there's one other kind of alteration that's a little bit unique, what is unique to the 2020 return here thus far. And that is if we go back up on this 65,430, this calculation is adding back the amount that was for the charitable contributions, because if you were to be itemizing, then you wouldn't be getting this $300 that would be up top here. So instead of taking the 65,130, we got to add back the charitable contributions. So I'm going to go back on over here, and I'm going to change this formula slightly down here. I'm going to say this is going to be the 65 and so on. Plus, I'm going to add back the items that are going to be on the adjustments, which is going to be that 300 for the charitable contributions above the line. So we have a slight alteration. So you might call this modified AGI at this point, or basically you're trying to see whether or not you're going to be taking the 300 on the first page of the 1040 or over on the Schedule A. If you take it on the Schedule A, then your AGI here will be 65,430. And so that makes a slight change to our medical deductions at 5,093. So now if we go down to the bottom, we're at the 6,462. We go back on over to the Schedule A here. We're at the 6462. So that ties out, but we're still not taking the itemized deductions. If we go back to the first page of the 1040, the 24,800 is currently greater, as we can see on the first page of our tax formula here as well. So we have the 24,800 greater than the itemized deductions at this point. Therefore, obviously, we're taking the standard at this time.